Good morning, traders. It's the 12th of October. We are Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, pretty good, mate. How are you?
Yeah, very well, thank you. Lots of interesting stuff going on again in the markets today, created by Mr. Andrew Bailey yesterday evening. Did you see that, Steve?
I didn't see it. No. What has Mr. Bailey, the wise man from the Bank of England, said?
Well, I guess that's a pretty nice segue into the latest headlines then, because it is the top of the list today. BOE, Bank of England's Andrew Bailey says no extension to gilt purchases. So, as we know, the Bank of England stepped in following the mini budget to try and support the bond and interest rate markets. And they haven't really changed too much in terms of price. Obviously, there was an initial move to the upside, but they've kind of been dragging lower since then. But he was quite stern in his words, insisting that pension funds needed to rebalance their holdings by the end of this week as he looked to resist pressure to extend the emergency bond buying programme. In response, gilts came under renewed pressure and there was sharp selling pressure in sterling, which dipped sharply last night, taking all of the sterling pairs with it. There was also a wider dip in risk conditions after Bailey's comments. In Asian trading on Wednesday, there were hints however, that there could be a U-turn from Bailey. So U-turns everywhere by the looks of things in the UK government, and it just really makes us look like a bunch of fools, to be totally
Pretty
honest.
pathetic. Yeah.
Yeah.
I love it the way he sort of like takes on the sort of what the FCA do is like, we need this information, we need it by close of business today.
Yeah.
You need to sort of like readdress what's in your fund, your pension funds, do it by the end of the week.
So
Okay. All
effectively,
right.
he's
How
asking
easy is that?
pension funds with billions under management
Hmm.
to basically turn their books in the space of 2 weeks.
Yeah.
Basically saying he's
Ridiculous.
supporting the gilt market, effectively asking everybody to throw away their gilts, I guess, in the next 2 weeks and rebalance into something else because this market's going to crash to the floor, is essentially what he's saying. And that's pretty scary.
Yeah. Another corker.
Yes, indeed. So elsewhere, US inflation expectations declined. The latest New York survey recorded a decline in one-year inflation expectations to a 12-month low of 5.4% from a previous number of 5.7%, although the three-year expectation did edge high to 2.9% from 2.8%. The Fed rhetoric remains hawkish. Cleveland Fed President Mester stated that monetary policy needs to be moved to restrictive levels and there's been no progress in cutting inflation. She added that the biggest risk is that the Fed does not hike rates enough and she is not expecting rates to be lowered in 2023. US yields decline, Wall Street unable to hold on to gains. The US bonds declined yesterday, which provided an element of relief for markets. The 10-year yield declined to lows below 3.9% before edging higher again. Wall Street rallied at times but failed to hold on to gains with closes in net loss territory. We also saw the dollar versus the Japanese yen post fresh 24-year highs. US Treasury Secretary Janet Yellen stated that the dollar's level is the logical outcome of policy, dampening expectations that there be any effort to restrain the US currency. Japanese Cabinet Secretary stated that appropriate steps will be taken on excessive FX moves, but the yen came under further pressure with dollar yen strengthening beyond the previous intervention level to trade at 24-year highs near 146.40. There was Chinese new loans that increased sharply by 2,740 billion Chinese yuan for September, well above the consensus forecast, while overall social funding increased significantly as well. The strong increase in credit provided limited reassurance over the near-term growth outlook. And this morning we've had the latest read on the GDP number for the UK, and that declined. It recorded a 0.3% decline in UK GDP for August as industrial production dipped sharply on the month. Okay, so let's get into the charts and have a look at what's happening there. Steve, do you want to kick us off with Bitcoin and commodities?
Yeah, sure. I'll start with our favorite Bitcoin, and it's hanging about the support level. This it keeps attempting to break higher. 20,500 is the most recent cap on price action. That was yesterday's high and the day before. Negative price action this morning. I think this is my gun to head yesterday. This was like a intra-trend head and shoulders formation. Now it's completely the opposite of what you'd expect. Normally you get a trend higher into a head and shoulders formation and then the reversal. This is a formation we picked up into trend. So I'd still keep an eye on it. And if we do get a break of this 17,600 level, we are going to have a quite a fast move to the downside. The opposite for XRP, Ripple, the XRP US dollar, that's an inverse head and shoulders formation. And that looks a lot more classic. We've had we're still sort of like trying to grind higher. 50% Fibonacci retracement comes in around about 60 cents. Looked pretty good until Sunday night. Monday and Tuesday, we've seen negative price action. So it is breaking down also. I was watching some people talking on the pending financial market collapse, and they said that everything has to go to zero first before we can stand any chance of recovering, which should be quite
financial reset.
The great reset, yes. Not just financial, sort of like world reset, it feels like. Anyway, let's move on before we get too inundated with spam and complaints about what we're talking about. Gold has broken below the support level once again. We had a move lower below it from the 15th of September to October. So we were 2 weeks we were below this supportive level. So this has in fact created more of a support level. In fact, the rally higher stalled, and we've drawn the bearish channel connecting the 3 days of the turnaround, the evening star formation or evening doji formation that we had with the hanging man candle. And this has now reversed lower, and it's back below that original support level. So under a bit of pressure, trading around 1670. We've obviously got the swing low down at 1615, but really there's not much between the 1660 level and the 1615 level. The double top formation projects a measured move target of 1362. Now that's a bit frightening. That's the dollar through the roof, to be honest. If we get to them sort of levels, prior to that, I'd focus a little bit more maybe on the 1450, 1460 area, where we've got the 61.8% fib coming in at 1440. Still a way to go before we start to test these levels, but markets can move very rapidly, especially when we have got a backdrop of the types of things that are going on in China, Russia, Ukraine, America, and all other parts of the world. Pretty messy place out there. So looking at crude oil, that rally has stalled and reversed. We got up to the previous support area of 92.27 in WTI crude oil. This provided support on a few occasions way back in March and April this year. The market rallied higher, came back down, and found support again. So this is quite a pivotal level, this 92.27, and we've reversed from here quite sort of dramatically over the last couple of days. Today's price action has been a bit more muted, but we've got Wednesday the oil inventories out later today. The low currently is 86.86 on this chart for WTI crude oil. The low for Brent coming in at 92.33. Obviously, Brent's still trading at a nice little premium to WTI crude oil. So yeah, under pressure, and potentially a break of 92.27 on the Brent side of things should lead to further downside. Natural gas is playing out this head and shoulders formation rather nicely. Also, we've got a little bit of congestion around the levels we're trading at currently, anywhere between 650 and 725. That's lasted a few weeks, and we expect a break of that. Expect it more to the downside because the trend is moving lower. However, I would be concerned if we did break up above the 730 level, that we could get another move towards the upside then. Yeah, I think I can pass over to you on the dollar, Joe.
Okay, thank you very much, Steve. Okay, so starting off with the dollar index as we usually do, still trending higher as we can see. This is the daily charts. So we've seen a nice move from the pullback that we saw last week. We engulfed all of those losses, and since then prices have continued to move higher. We had quite a tight range yesterday in terms of sort of the close, sorry, from the open to the close. Little bit of weakness setting in early doors today, but overall, the trend still remains very bullish, and I don't see there being any signs of it slowing down. Obviously, we had Yellen's comments yesterday, not looking to stop the dollar strength for the time being. So for now, it looks like we're going to continue to see more upside there. In terms of what's going on with euro US dollar, that still remains contained within this bearish channel. Again, no signs of it slowing down. We rallied into resistance here at 99.42, and then prices have continued to move to the downside. We saw a little bit of an attempt at a move to the upside yesterday, but it ended up closing pretty much where it opened. Minor bit of strength being seen today, but we've got support down here at 95.95. And then the swing low that we posted on the 28th of September at 95.35. So yeah, not looking too healthy on that front. Obviously, sterling has seen some volatility. Can't really see it so well on the daily chart because the ranges of late have been pretty big. But we obviously saw the intervention from the Bank of England down here. Big move to the upside, rallied as high as what did we get to 149.90, and then prices have continued to sell off. So yesterday we saw quite a nasty looking candle. As we can see there. If we zoom into the intraday charts, just to have a look at the impact of Andrew Bailey's comments yesterday, it was all looking pretty rosy for a period, but then he came out with his comments basically telling pension funds to get themselves in order, and we will not be in the market to support the gilt markets beyond Friday. And this saw a really big move to the downside. And then maybe what we're seeing here is these murmurings of a U-turn already. You can kind of see that shape in the chart. This is the Andrew Bailey U-turn here, which is potentially sending prices higher in the short term. I mean, very volatile. I don't know how you'd go about trading this at the minute with any great deal of success. It's pretty scary stuff. So do be careful if you are trying to play really anything linked to sterling at the moment. It is super choppy out there. Let's get rid of that. And back to my crosshairs. What else can we look at on the currencies? Well, dollar yen, as we heard in the roundup, hit a fresh 24-year high. So this was the previous high we posted on the 22nd of September. Ended up being a massive range, as you can see there, but we've gone back to retest those levels and then break above the 145.90 level to close or trade at the highest levels that we've seen in 24 years. So it'd be interesting to see if we can close above this level on a daily basis. I think that would be quite significant. If we close below it, then maybe we are forming quite a stiff level of resistance there, which may take a while to break down. But all in all, dollar still is the king and showing no signs of slowing. This is dollar CAD. This has rallied into previous resistance levels at 138.37 to 138.55 and seems to be stalling a little bit here. But you would be a brave man to back against a breakout on that. I think it looks pretty strong indeed. Then we've got dollar Swiss. Pretty choppy stuff here. These two battling it out for safe haven kings, and at the minute it's the dollar that's running away with it. It's back up to or close to resistance at 100.49 to 100.64, and looks pretty robust for the time being. Let's move on to indices then and have a look at what's happening today. So ASX 200 posted a bearish engulfing candle yesterday. We engulfed all of the previous day's gains. So that indicates that we are going to continue to see this downtrend persist. We've got major support down here at 64.03, and I wouldn't be surprised if we get a retest of that level sometime soon. Really quite interesting turnaround in China 50 today. Not a market we often give much attention to on this video, but as you can see here, we've got this previous swing low from back in March. We've gone down to retest that this morning before posting a really sharp reversal. looking like quite an impressive bullish hammer candle as things stand. Obviously, a little way to go before we close off the session and confirm that, but nonetheless looks quite interesting. So keep your eyes on that. In terms of what's happening with the DAX, that's struggling a bit this morning. Most of the other indices are green, but not the DAX, slightly lower as things stand. So we've seen a breakdown of this major level here at 12,441. We then saw a big move to the upside to recapture that level, but then we've started to see the market fade again to the downside. So for me, this is the main level that we need to watch. The lows from the 3rd of October at 11,810. If we take that out, then we're targeting moves down to 11,334 and a 61.8% fib level at 11,147. While we're on Europe, let's take a look at the FTSE 100. So we saw a big move to the downside on that yesterday. Undecided as things stand, but we are back now to this major level of support. Around 6822 has been capping the levels on the FTSE for some time now, going back to May 2021. We've seen a number of touch points of this level. When we've seen the bounces from this level previously, it has just been kind of wicks of candles before quite a sharp move to the upside, and we've seen that now on a number of occasions. So I think probably a little bit more worried about this one, because although we have seen a decent move to the upside, there's been nothing that's been sustained, and quite quickly we're back to that level again. So if that starts to break down, I think we are confirming a pretty large top in the FTSE 100, and we can start thinking about lower prices over the medium to long term. The first of which being this 38.2% fib level at 6568. Onto the US markets. Not a great close yesterday from the Nasdaq. So we saw this swing low back here from June. We saw a decent move to the upside, and then obviously a further collapse back down to test those levels and actually making a new low. We saw a decent move to the upside, obviously hoping for some follow through higher. It hasn't come, and we've reversed back lower, and we actually made new lows in yesterday's session. So not a great sign, indicating that we are making lower lows on the Nasdaq. Holding that level as it stands at the minute on a closing basis, but it doesn't look too great or healthy from my perspective. And I think this 10,500 level is a good level to target in the short term, being the 61.8% fib level of this entire post-pandemic move that we saw in the Nasdaq. So this is the 2020 lows. This is the huge rally that we saw to the upside. The 61.8% fib level is coming in at 10,500. So it looks as though we're going to give that a test, I think, in the coming weeks. Let's take a look now at the S&P 500, the broadest of the US indices. We didn't make a new low in this yesterday, so it was tech really that took the hammering. Yesterday, we've got this swing low from the 3rd of October coming in at 3559. If that gets taken out, then we're looking immediately at this 50% fib level at 3,500. Then we've got a measured move of this head and shoulders top pattern coming in at 3396. So looking for lower prices there. And let's just finish off with the Dow Jones. Quite choppy stuff here as well. The low from the 3rd of October actually still remains intact, hasn't been tested just yet. Again, on the downside, that's at 28605. Doji candle formed yesterday below resistance at 29653 to 29672. So while below that, I think we are going to see a retest of this level and eventually it break and then head down towards this 50% fib level at 27578. That's it for the indices, Steve. Unless there's anything you wanted to add there.
Just having a quick look at the sort of like the bond markets, really, the sort of gilt, the 10-year markets. This is gilt yields, and we take it from like the 1980s all the way down to the lows on the yield that we had in the 2020s onwards. And just looking at where really Fibonacci retracement levels come in, comes in around about 6% for the 10-year gilts, compared to similar sort of levels for the 10-year in the US, comes in just above that 6.26%. And you can see this, these 10-year bonds are, government bonds are reacting very, very similarly. And also the Germans, they're a little bit tighter than we are. They get up to 4% on the Bund, on the German government bonds. So actually, there, that's more like it, 3.8%. Just interesting, really, just like trying to sort of like work out exactly. I mean, this is the UK 10-year gilt price, which you can see, if you're a fund manager or a pension holder, and you've got a lot of gilts on there. You've got a lot of gilts that you paid a lot of money for, and the rate is pretty poor compared to what you can get out there on the high street even now. So yeah, it does look a bit messy. However, there is a level, really, we have to sort of like break below this 91.84. And I said this the other week, when you get a spike like that, it normally, you get the reaction rally, but you normally retest it again. Are we retesting it now? We saw a bit of a doji yesterday on that, and the potential for a bullish candle now if the pressure does, if it does turn around again. So, and then that would form a double bottom. That would sort of lead to potential for a break higher, and maybe the measured move for that double bottom would be something a little bit more palatable up at the 111 level. But yeah, very strange comments to sort of come out with, and obviously it just sort of like goes hand in hand, really, for what I'm looking at on the cable. Are we going to see the same sort of thing? Are we going to see a revisit to retest this 103.70 level or not? At the moment, it does look favoured, but you never know. I don't really trust central bankers. I definitely don't trust Andrew Bailey. So yeah, central bankers have sort of let me down in the past, Swiss National Bank and all that. So yeah, coming out with comments and then sort of a day or two later reversing, seen it before. So
Yeah.
be careful with that, them sort of markets.
Interesting with the gilts, looking at those this morning. So his comments, you would have thought, would have crashed it today,
Yeah.
but the fact that it's sort of fairly flat at the minute indicates that the Bank of England are in there buying aggressively to keep it propped up.
Yeah.
So I don't know. I mean, effectively telling everybody to ditch their gilts. If they pull the buying back, I mean, just feels. I don't know how I feel about it, really. Is this a buying opportunity for
Yeah.
gilts?
Well, from a risk reward perspective, we'd say yes,
Yeah.
because you've got the sort of like the previous high in the yields here. You've got it's held three days on the spin now. So yeah, from a risk reward perspective, look at the risk reward on this is, again, from a technical perspective, the measured move target is a move back down to below 3%. So you're looking at a risk of, what, 30 basis points for like an upside of over 150. So
Yeah.
like 5, 5, 6, 4, 5, 6 to 1 risk reward on that. And they're the sort of trades that, as technical analysts and traders, you're really looking for.
But if the
Yeah,
Bank of England do stop buying come Monday, are we going to get a huge gap to the upside on this, and it's just going to wipe through any stop that you would have had on that?
potentially, yeah. That
That's
is
the
the
risk.
downside. Yeah.
Yesterday, I had a call from a mortgage advisor because with our fixed rates up in March.
Yeah.
What a time, eh? So we had a rate, I think, locked in for like 2-year fixed at 5.5% or something like that, which is awful, obviously.
Yeah.
But rather than doing nothing, because the potential was for rates to maybe keep going up, we wanted to get something kind of agreed in principle. But then the guy phoned me and said, right, you've got to take this rate now, because if you don't, I've been told by Barclays that the rate's going up to 6.25% tomorrow. So
Really?
yeah,
Is that
it was
Barclays doing a
75
little
basis
job
point.
on us as well?
Yeah, maybe.
Is this it? Is this what's happening? I think we
Feels
can
like it,
see it
doesn't it?
now. Don't trust bankers, central bankers. Don't trust banks. Yeah, everyone they're sucking everyone in to get these, like, oh, get this right now, and then we have the turnaround. I think sort of like elevated rates for too long. The central banks can't afford that. They've got so much debt. So how are they going to sort of like, keep taking on debt, and how are they going to afford to pay it back? So the central banks themselves can't afford to sort of like for this to carry on for too long.
Mm.
And as I've said before, I just don't think it's, you're using interest rates, like monetary policy, to sort of to try and quell inflation, but it's not being caused by us going out and spending needlessly. It's been caused by the energy issues. So focus on that, sort the energy problems out, instead of sort of like hammering everyone with interest rates. Looks like they're coming to get us, Joe.
Yeah. Right, let's get our gun out, shall we, and put it to our heads and see if we can come up with a trade idea. So basically, each day we come up with live trade ideas on the video in the hope that we can make a decent bit of return between now and 9 o'clock this evening when we close these trades out. So we had a couple of trades yesterday. I wasn't on the video, but Steve, you went long of Bitcoin trying to call the bottom, and you got some smelly fingers as a result of that. Sadly, that was stopped out. So these trades are published up to our TradingView account if anybody wants to check them out. So this is Steve's trade yesterday. Got off to a pretty decent start, to be fair.
Yeah, I thought I started counting my chickens, Joe. I thought, like, oh, done, happy days.
Yeah.
Go on, Bitcoin.
Big reversal. Taff was buying, he was selling oil. So we don't actually have that on here at the minute, but we can bring up the oil chart just quickly. He was selling crude. Look at the intraday chart. He did. He made 1.27R on that yesterday. So well done to Taff. He was selling at 8 a.m., which was around here. And at 9 o'clock in the evening, he was nicely on side. So well done to him. So fresh trade ideas today. Just to reiterate, this is just a bit of fun. Obviously, markets are volatile always, but even more so at the moment. And we're just trying to see, what we can spot with our experienced technical analyst eyes and see if we can find something that's going to work between now and 9 o'clock this evening. Steve, have you got anything ready?
If you've got something ready, go. I'm just about to draw it. Okay.
Bit of live TA here.
Yeah, perfect. So head and shoulders formation. I'll just take it from this level here.
Are you going with crude again?
I'm going to sort of like follow on from what Taff did yesterday. Bit of a head and shoulders formation, maybe a double head, so a bit of a complex formation, and probably a couple of shoulders, both sides, left and right. So this looks like it's primed quite nicely, and the volatility we'll get from the all inventories this afternoon should give this a quick win or loss. Now I want to sort of tighten the levels up here, getting short here at 87. It's 88 trading. That's nice. 88 trading. So that makes it a lot easier for me to work out my stops, etc. Oh, what does that look like? Does that give me enough room? Does that give me enough room with the volatility we're expecting? Probably not. Why don't I just leave it where it is? Or make it a bit more realistic. Yeah, that's what I'll go for. 2.5 to 1 risk reward, selling at 88 the figure, stop at 89, and the target of 85.50. That's on WTI crude oil.
Okay, thanks, Steve. No idea what I'm going to look at, but let's go with something. FTSE 100. So getting a bit of a hammering now over the last half an hour or so. Obviously, lots going on in the UK at the minute, which is impacting this particular market. But if we look at the daily chart, just to bring that back up, we are fast approaching this major level of support here. So we've got this highlighted with these blue arrows. 6822 is kind of the level that I've highlighted as being the major one that I'm interested in. We are coming back close to this level. Just to reiterate what I spoke about earlier, last time we've seen moves to these levels, there's been big reactions to the upside, and they've really pushed on higher for a considerable period of time. We're not seeing that on this occasion here. This is the 5th attempt at this level. So we did see initial reaction, but now we're back to it pretty quickly. So I think we're actually going to break down here, and it's not going to look too handsome as a result. So I'm going to back a move lower, currently trading at 68.51, going with a stop loss above the highs that we've posted over the last 2 hours. So that's at 69.27. And that means I'm going to have a pretty lumpy target in order to make the risk reward favorable on this. So I'm going to target a move down to 67.00, which gives me a 2-to-1 risk-reward ratio on the FTSE 100 today. So it would take a pretty substantial move, talking over 2% lower. So potentially bracing for a nasty day on the equity side of things if that is to play out. But I was under a bit of time pressure there. I didn't have anything ready, so that is a proper gun to the head trade there. Let's see how it plays out between now and 9 o'clock this evening. They will be
Nice one,
published
Joe.
up to our TradingView channel shortly, so we'll get that done. Okay, let's look at what we've got the day ahead. So we've got US producer prices at 1:30 today, a latest read on inflation in the US, so that will be certainly well watched. 7 o'clock this evening, we've got Federal Reserve minutes, and again, that is a pretty big event for the market at the moment. We'll be seeing what they are thinking with regards to monetary policy, with regards to rising interest rates. We have seen them be exceptionally hawkish now for some time, and there doesn't appear to be any change in course, unlike the UK, which is loving a U-turn at the minute. So let's see if the Federal Reserve stay the course with their hawkish rhetoric. Later in the week, we've got consumer prices in the US, and we've also got retail sales. So yeah, that will do us for today, I think, Steve.
Yeah, nice one.
Cool. Have a great day, everybody. Sorry about the stream. I think it was a bit intermittent today. I'm not sure if that's outside or on TradingView. There have been a few comments, but they've been coming through sporadically. So if we didn't get to your questions, please come back tomorrow and we'll do our best to get those answered for you.
Yeah, I heard, I was watching it and it was blank for a while, but I could hear us speaking. So yeah, I don't know exactly what the issue was, but hopefully we'll get it all up and running fine tomorrow.
Yes, indeed. Okay, have a great day, Steve. Catch you tomorrow.
Cheers, and you, mate. Cheers.
Bye-bye.